From inflation to interest rates, today's ongoing disruptions present opportunities for investors. In this series, our portfolio managers explore how PIMCO's deep expertise across public and private markets gives investors the flexibility to navigate the ever-evolving landscape.
We're seeing spreads back out again, but we're also seeing levels where the levels of distress and default potential become more attractive to where they're actually priced. These are the types of markets that I think we, as a distressed investor, you wait for. And you're always thinking they're just around the corner, and they never seem to appear on exactly when you expect, but when they're there, it creates a lot of opportunity.
For us, we view distress as a way of essentially buying companies at a discount. And so as long as our underwriting assumptions are correct, and we do a very significant amount of work together with the rest of the firm and our different colleagues in different teams, in order to build conviction on the value of various businesses and their prospects, and as long as we can identify those businesses and create them at a big discount, it's attractive. There's constant communication, constant cooperation, constant sourcing of ideas on both sides. Maybe we've looked at a distressed name in the past, have restructured it. The company emerges from bankruptcy, and the new term loans, will be very interesting. And I'll talk to David and suggest, potential investments, and vice versa. Our colleagues on the traditional side might have positions in companies that then unfortunately become distressed. And at that point in time, we will look at it, work with them on a restructuring, trying to maximize returns and recoveries for investors. So there's constant cooperation.
So our teams are always working together to uncover opportunities. We had one very recently. It was a large company that owned a bunch of smaller companies. We had insight into a bunch of the different businesses that they were doing because of speaking to the company management. And Mathieu and the rest of the team brought that up as an opportunity in the public market for us to invest in it. Nobody else would have seen those types of opportunities if we hadn't been there for the private side as well.
We don't need to make an investment in a certain format. So if the public markets are more attractive, even in the private funds, we can make public investments which offer a better risk-adjusted returns than the private markets. Or when we work on a private transaction, we often reprice the loans that we are making to companies to reflect the evolution of the public markets. And I think that relative value framework is something which is quite unique, and that essentially comes from the fact that we have such large both public and private sector presence.
So when we look at things and we look at them often together, we're really providing solutions for companies, for private equity sponsors, for sponsors in general. And they could just be a bilateral loan, or it could be something that's completely a bespoke solution.